Hello, Warriors. Let's have a great week. Brand, Mary, AJ, team.
Morning.
Morning, guys. Morning, guys. Hope you had a good weekend.
All good.
Did you? Huh? Pretty good?
I told the guys on the flow show it was mostly kids' parties for me, so
Okay.
could have been better.
Yeah, you love it.
I do.
So, anyway, just a couple observations before I get to you guys. Interesting that the VIX would gap up with like this, with S&Ps only down 11 handles. So, you know, someone's buying hedges and smells, the potential of a risk-off event. Haven't seen gaps like this in a while, so I thought I'd point it out. So maybe it could be a give back week, it's starting off that way. And then the only other thing that could end up being important for precious metals traders here is what I see happening in the gold silver ratio. Okay, they have a big falling wedge here, and your first sign that silver's about to enter a period of underperformance would be back over about 83 is a pretty key pivot, but it is a falling wedge. To break out, it would have to trade 86. That would imply a retest of this high up here, all the way up here, because that's where I have it anchored. So just something to be aware of in the coming weeks. It's not a day trade. It's just something that might be developing there. And I want to open it up to you guys. We're fighting our way back in Euro, but we've come up to a lot of major resistance lines. Here's this 103.50, 60 level. We talked about that, I don't know, months ago when we finally broke down here, 2017 low, etc. Another one that's, look at copper. It almost got back to $4 when we were talking about down here that could rally to $4. And then silver, you have this 22 number, which also goes, if you really go back, this is a monthly, that there's a lot of stuff up here at 22 for a pivot. So that's what I see. Sal, you want to start off anything in Europe to explain, was it just profit taking after a great week in euro and cable and a terrible week in the dollar that, we're just getting a little bounce back in this
Yeah,
stuff?
that's a good assessment. Also, let's not forget, we haven't heard from the Fed yet. The market got very excited about CPI dropping, and it was a big drop compared to expectations, but we haven't heard from Jay Powell, and Jay Powell could easily not be as happy as the markets are, and he's done it before, and there's a good chance he's going to do it again. And they've said that, they said one, but I think they probably imply, 2 or 3 or 4 data points don't really make a trend unless it's pronounced. And yes, we've been, grinding lower in inflation, but it's still at high levels. So there's a chance he can disappoint the bulls. Now, yeah.
Kibosh it again, huh?
Yeah. I mean, having said that, I still think that inflation is going to start dropping pretty quickly in the first quarter of 2023. Maybe it's already started, but at this point, the Fed doesn't have yet, I think, the necessary ammunition or reasons to turn dovish, and that's why I think there is a risk still for a risk-off move and another spike in yields and the dollar.
Okay, so a lot of confluence in S&Ps up here around this 4,100, which was a level a lot of people were looking for at these lows for us to rally back 4,150, 4,100. So we're almost there. Just something to keep in mind. And, the period from here to Thanksgiving sometimes could be a negative period. We'll see. And now I want to get to Ryan and K-Man about the yen fighting its way back. took out almost every support level. This 140 was a pretty important support level, but do you think we're now open to some type of correction? And would it be enough to get back to the breakdown at maybe 145? What do you guys think?
Hey, good morning. Good
Good
morning.
morning, K-Man.
Now the 138.5 is the 61.8% of the last move from 130 to above 150, and it stopped right there.
All right.
Yeah, we spoke about it already Friday in the chat rooms. A bit speedy move, perhaps. Yeah, so a bit of knife catching there, and now we're about in the middle of a. If we've seen the top, we're about in the middle here of a possible retracement up into the 141.5, 142 on the dollar yen. But what I did do on Friday evening as well, together with a couple of people in the room, is we caught a knife in the euro yen, because if the move on dollar yen was overdone, the euro yen was looking pretty juicy as well, around 104 low 143s, high 142s, and that's holding now. Yeah, to me now we're in volatile, but perhaps a more rangy pattern. On the dollar, the US 10s held the 50-day moving average. On the twos as well, there's a bit of support around I think it's 430 or so, and then another bit at 420.25. To me, now we are going to look at real data, real economic data, and if they don't hold up, or the slide is a bit too abrupt, then I think the yields can come further under pressure and drive the dollar as it's done over the past months. But in the short term, at least, to me, more range but volatile.
Okay. Because the yields under this level, there's an awful lot of space underneath it, so it held where it had to.
Yeah, it held where it had to, and
yeah.
I don't see, well, unless we see more data crapping out, really crapping the bed, I don't see a fundamental, I don't see too much reason for going far below under there right now. Of course, if the data worsen, then this is going to crack, right?
What's a big data this week? Market
we've got a bit of PPI. We've got the retail sales this week. We've got a bit of housing data as usual.
So we have inflation data,
but we have a plethora of Fed speakers, to start with Brainard this afternoon.
Okay.
And don't forget, we have producer prices. Good morning, everybody.
Hi, Blake.
That's what I said. Yeah.
Sorry. Wasn't sure if you said it or not.
PPI is today?
Tomorrow.
Tomorrow. Okay.
Yeah.
All right.
I laugh every time Cayman says a plethora. I remember the movie The Three Amigos. Do you remember that one?
Yes.
That was such a funny movie. Anyway, sorry, carry on.
That's all right.
You know, that's the flow show still.
Yeah.
The other one,
and USDCAD is kind of reaching towards, prior highs, old breakouts here. And I see there's some, alarm set here around 132. So, it wouldn't be abnormal for it to rally back to the breakdown at 35. Possibility we get that, and then go to 130. So anyway, that could be a test, but we're almost there. I'd be curious if Greg is here, if I think his view may have changed in Aussie. How about yours, Ryan? You're still holding your longs, right?
Yeah, I'm still long. Yeah, I'm still running.
No reason. A lot of confluence here at 65 on the daily, but the 9 and the 50 coming in at 65. That would be important to me, right?
Yeah, there's some fibs up there as well, just a bit higher, 67.40. But yeah, this it's looking like we're building a bit of a resistance up here. As I was saying last week, that's what you want to look for. Everyone wants to pick a top and catch a knife and whatever. You just got to let the price action show you. If you go to a 15-minute chart of the Aussie dollar, you can see Yeah, you can see you've just got a period there where we just, can't get through that 67 area.
Yeah.
That's what you want to look for. If we nick up to 67.20, the move's not done. If we can't get above 67 for an extended period, we're going to dip lower, probably back to mid to low 66s.
Might even be like another tip here. This is the price level a lot of Ellioticians were looking for if it was going to be a wave 4. They thought Aussie would stop here at 660. And look how 660 is coming into play here. So maybe take back under 660 is your first warning sign that we're going to head lower, right?
Yeah, exactly.
We've got it all cased. All right, guys. I'll see you tomorrow.
Is it Friday? Can we go home now?
It feels like it. Anyway, we have it all cased, and I want to bring Blake in and see what his thoughts are this morning. Is your head in the market? I guess not. I guess not right now.
I'm here.
So, okay.
Here. Yeah.
All right. So, what are your thoughts today? I know that they're divided. Anything that looks important to you, Blake?
You were just pulling out. Well, first of all, happy Monday, guys.
Yeah.
So I want to show you the dollar CAD first of all, because you were just sharing it, and you're exactly right. Actually, this update, you can read it right here on ForexAnalytix. If you whoops, not right there. Sorry. Let me go over to the updates. Here's the basic technical analysis of the dollar CAD. That was just mentioning that we're looking for, this head and shoulder pattern eventually to get us to the 130 level. But, when you get a move, especially a move like this, and I think Stelios brings up a great point, and the Fed needs to see more data than just one data point. And we saw a very outsized move this last week, which we were expecting. I was playing short the dollar, and I think a lot of people were, and it was great. It worked out well. But when you get such a big move like this, and we only had one data point to really look at as far as inflation goes, there's a good chance that we're going to see some back and forth movement in the dollar. And I do agree with Stelios what he said, that inflation is starting to turn lower. So now, as a result of that, it's probably not going to give us, one straight move down. We're probably going to, see bounces. And I'm going to point out where the euro's at right now, but the dollar CAD, can we rally back to 134? Can we get back to 135 before rolling back over? Yeah, I think so. And while we're above this 132 level, that's also a 618 Fibonacci retracement. You guys can clearly see, that right here. Let me grab just give me 1 second here. You can clearly see the 618 retracement right there, right? So I think a bounce back to 134 to 135 is not out of the question before we eventually make our way down to, 130. So, getting one fail swoop between, the breakdown point to here is probably not going to happen. I mean, not in this environment, not knowing how aggressive the Fed has been and what their mandate is and what they're looking at. So my 2 cents is, you probably want to, be a buyer here, or at least cover some shorts down here, look to reestablish shorts somewhere up in this neighborhood, maybe, a couple positions up there, making sure you keep your stops right here, looking for an eventual target down to 130. That's how I'm playing it. I would not want to be short the dollar CAD at these levels. I'm not saying that it can't break down. I just personally don't want to be shorting down here. So, and that to me makes a lot of sense. Now, that doesn't mean it's going to play out that way. That's just the way that I'm thinking in my head that it should play out. Now, also, talking about the euro dollar, look, the euro's made a great move. We got a nice bull flag developing. Here we are up against really major resistance. You can see this, very, very key level of resistance multiple times. It's resistance on the way back up. And then we have the 200-day moving average coming right here. So chasing the euro into these levels, not my cup of tea. I've done it, and I've played a little bit. I've actually played both sides of the euro this morning. I'm going to have very limited time in front of the computer today. But the time that I've been here, I've played it on both sides of the euro this morning in the chat room, you know. So if you guys are in like the ForexAnalytix chat room, you can see right here, you know, picked up a euro third size at 102.81, closed it out for 10 pips. I reshorted, you know, euro right here at 28, closed it for another 10 pips. And that's how I'm playing the euro. I'm playing it on both sides, you know. So, you know, that's what I'm thinking at this point. I think the market's gone really far, really fast. But you look at gold, gold's also very, very bullish at this point. You know, it was showing us the way last week. If you guys don't recall, gold was already broken out before the inflation data came out. So,
yeah,
you know, the inflation data, we already had this move developing. You can see it here on the 4-hour. This was pre-inflation data. This was post, whoops, let me get my pen again. This was post-inflation data right here. So post CPI, but prior to CPI, we already had a couple flags developing. So, you know, gold is still holding up, and while gold's holding up, you got to be a little careful if you're like what I just did, you know, trading both sides of the euro. So that's my opinion about what's happening with the FX market. You just got to you kind of got to be aware of that. We're past like a lot of the major you know, releases, but as K-Man pointed out, you know, just a moment ago, we do have a lot of Fed speakers on the docket. So it's going to be really interesting to hear their commentary this week. Who was it last night? Ryan, K-Man, Stelios, you guys have been around. Who was it last night that said
Waller.
who? Waller?
Waller.
Got it. Yeah, I knew somebody was out there yammering last night. I just haven't had an opportunity to go back and read everybody's comments. For those of you that don't know, my wife's undergoing some surgery today, so I've got to. I've been at the hospital pretty much for the last 4 days straight. So anyway, that's why I saw comments. I haven't been able to take notes like I normally have. So what do you guys think equities should be doing here? Because equities have had a nice recovery. You know, but you can see they're just kind of consolidating. I mean, I personally think that the 200-day moving average is, you know, is doable. You can see it. We also matched up with 161% extension of the last big leg down right here. That 200-day should come into play, but that's, you know, just above 40, you know, 4,050, and I think that's going to be pretty significant resistance on the way up.
Agree.
You guys agree with that, or what are you guys doing?
Agree.
Yeah. I mean, you know, that's going to be pretty critical. Let me also ask you guys this. You know, here we are heading into, you know, the holiday season, and shoot, I can't even believe we're 2 weeks away from Thanksgiving here in the US. Less than 2 weeks actually. That's crazy to me. But anyway, we're heading into the holiday season, and I know a lot of people get hung up on the seasonals of you know, a Santa Claus rally. They want to be buying stocks here, but the one point I made during the week ahead video is that I've seen Santa Claus rallies take place the day after Christmas. So you know, it's not necessarily it's not necessarily you know, between now and Christmas that you see this seasonal move higher. What do you guys thought on the S&P? You guys have any views here?
No, personally, not one. No, I have no view. It all depends about the real data. I think the really kind of, I mean, stuff outside PPI and CPI. I think we need to see growth data now, how they develop. But in the short term, I really have no view. No.
I think the VIX is worried about something, Blake. I was showing the gap up earlier.
Yeah, you know, well, volatility's coming. You know, it is gapped up, which is interesting. I find it rather interesting as well. One of the things about one of the things about the VIX that has been impressive to me is that we never, and this is, I know we've made mention of this, but we never rallied, past 40 during this whole entire sell-off. But now that we're down here, I'd be really careful too. I think, people might be a little complacent, down here. So, that's another thought. Stelios, you have any views on the S&P down here?
I think we likely grind a little bit higher, but like we said before, there is a risk of Fed speakers ruining the party. But I think all else unchanged, I think we probably have a little bit more momentum going into that 4050 to 4100 level, which I think is pretty important.
Yeah, Mike asks, what about harvesting tax losses before year end? I mean, I don't know if that's going to be a huge theme that's going to take hold.
They might already be out, Blake.
Yeah, I mean, I think a lot of people are. Well, one of the things, and we were talking about this. What day, I'm trying to think what day I was actually in. I guess it was post-inflation data. I was in the office a little bit. And when the equity markets were exploding higher, I'm like, you guys got to be careful. And the conversation that we were having in the chat room, or at least comments that I was making, I didn't get to read everybody's follow-up comments because I've been, like I said, back and forth between the hospital. But the comment I was making is that you're getting a lot of institutional traders that need to play catch up, so they don't they can really care less about the mood of the market, at least, at the end of last week. They just wanted everybody's chasing gains, because that's kind of the name of the game for most institutions right now. They're just trying to make up for lost ground this year. Not only do they want to be outperforming the indices, even though the indices are down significantly, they want to, show that they're really outperforming. So they're, any type of long only fund is going to be buying into last week big time. That's why, if you were trying to fade the equity markets, following the inflation data, I think that was a hard trade to do, because everybody's chasing right now. But there is a point where things get, people get a little too aggressive, and you have to be careful of it pairing back. And that's the place that we're at right now. I think, as you pointed out, Stel, we could probably, get a little bit of a pullback here, maybe a rally back towards, mid 4,000. Then I would look to be selling risk going into year end. That's kind of my play, and that's what I'm going to be looking for going into, December. Those are my thoughts. One of the other things that really had my attention, and even though I was just short the dollar MEX this morning, I was shorting it, around the 1953 level. And K-Man, maybe your view here, I'd love to hear it, is that we had a false breakdown last week below this really, really critical support, that this one right here, that 1940 level. And Friday it ripped up, and I wasn't in front of the computer, but it ripped up, and I think it was because of Mexican PMIs, I believe. I think it was PMIs.
Was it?
Yeah, I want to say it was. It wasn't inflationary data, and it was, following Banxico, but it was it was Friday. So Friday, I think it was some weaker economic data, and I don't know if that's what carried it higher, because I wasn't in front of my quotes at that point. Because I was in the emergency room at that point.
I see what you mean. The industrial production. There we go. So it was something, but I wasn't sure if that was the catalyst. The one thing I want to point out about the dollar MEX is we did have a false breakdown, but I want to show you guys this big, because I've been very bullish the Mexican peso, and so is K-Man. We've been and I know some other people in our chat rooms have been as well. We are below this multi-year trend line. You can see it's from 2017. And that still held, even though we had this, reversal on Friday. We stayed below it, and that's why I was on the short side over the weekend. I closed out for very little profit, and I should have hung around just for another hour. It'd have been great, but anyway, it doesn't really matter. The one thing I have been noticing is if we do get
a reversal in risk up at these levels. You know, people start looking at the S&P near the 4,000 level and they want to start selling. You know, I think the risk is that we actually break back out to the upside. You know, we start, you know, making a move back up here in the dollar max. And even though that's not my preferred way to play this pair, it is something that I am, you know, paying attention to. Do you have any opinions here, Cayman?
Yeah, really. I think it's okay. What we've seen last week, and I've said it on the Flow Show as well, I think is the revenge of the low yielders versus the higher yielders. In other words, there's a lot of carry trades being unwound.
Yeah.
And that is what we saw last week. Look at the Euro Max has really had a big jump last week. And I was very fortunate I didn't catch it like really at the lows, but I was fortunate to get out of mine. As a matter of fact, I started to very shyly, very small, started to leg in again today, but extremely small. Yeah, and I think that's what mainly did it. And now we have to look at really how the economic data will develop to see if people will get how shall I say the reason enough reason to get back into carry trades. If Mexican data, because Mexican data, okay, we've had this industrial production, but it really year on year came out with last month. The one thing that we risk with the mix right now, two things, is the real economic data and Banxico, because they said that they may not follow big hikes anymore after this one compared to the Fed. So Mexican rate hike cycle is much more mature than the Fed one, and that may be a risk to the mix. Now, look at it just from.
I know what Banxico is at 10% right now.
10%, yes, exactly.
10%.
That's what I was just going to say. And if you take, as I'm pleased to do, if you take like the mix, the Canada and the US, like the American bloc, if as long as the American bloc doesn't really crap out, I still think the mix has value in it in some way.
Well, thank you for your view there. I do appreciate it. All right. Well, hey, I want to ask Ryan, you've been kind of quiet today. What are your thoughts on the sterling up here? Because, you know, it's had a nice squeeze. Are you a bull up here or what?
I'm jobbing it on the short side this morning or today.
Why? So why? And I'm curious to why your view is being on the short side up here. Is it more of a euro sterling move, or you looking to actually trade the cable?
No, I'm just having a dollar play. You know, okay. I think Friday was or last week was well overdone. We're starting to see some tops and bottoms coming in various pairs. You know, we looked at Aussie dollar 67s. You've got dollar yen 138.50s. You've got cable now up at 1800, 1820. Yeah, I'm just scalping off the tops and the bottoms, but letting the price action show me where those are. You know, same as you're doing with euro dollar, playing both ways. You're going against this resistance zone in the 103.40s. So yeah, I'm just scalping it.
Is the euro sterling showing you anything that because, you know, for me it's a big jumbled up mess. I'm looking at it going, well, not really. What's that?
Yeah, it's exactly the same for me at the moment. It's a big jumbled up mess. I mean, we're 87, 88 at the moment. If you want to scout between that range, go ahead. If we get a break either side, you know, you're going to be, where you're wrong, really. But, I've got no fundamental direction for euro sterling right now. We need to be careful because Thursday we got this autumn statement, you know, this budget stuff that's been dragging on since Liz Truss's days. That's all coming up on Thursday, so that could be a mover for the quiz.
Liz who?
Exactly.
No, I'm just kidding. I'm just joking.
Liz Truss, she's on the bus.
Oh, all right. So, you know, I just noticing here that the euro sterling is really, and I know it's, I've written it in the analysis last week, but I just refreshed my memory just by looking at the chart here, that this 38% retracement is holding. And I guess if I was trading the sterling, which I'm not, I don't have any exposure there. I would be really, really careful while we're trading below here. But I believe if the euro sterling breaks above this previous high, which called 88 and a quarter, we break above that. I think that would put some downside pressure on sterling. So very nice. Well, Dale, you have a guest coming in, right?
I'm hunting. Steve Clapham, are you here? Let me know. I see a Steve. I'm not sure it's you.
All right, we'll wait on the response here. I don't know if Steve is here.
He's here.
Oh, hey, Steve. Well, while you're here, since we don't have any economic data breaking, how's it going? And what are your thoughts now that you're settled in, back from the United States? You stop eating all of my my food. You know what's yeah.
I miss
Steve Clapham's in the room, by the way.
All right, cool.
All right,
great. So, Steve, what you have any thoughts on the market while Dale's bringing up Mr. Clapham?
S&P is at resistance 61.8 of the last move lower, so we might see a pullback from here. But in general, as I was saying last week, I think there is potential for these moves to extend a little bit further before they poop on the party again. And I think it's probably going to happen again. We might have seen the beginning of the end for the Fed tightening cycle and the dollar. We might. But I think that it's not going to be as easy as people believe from this point on. I don't think that we're going to keep on collapsing and indices are going to be rallying to new all-time highs. There are particularly big obstacles in the way, and I think we're going to have a very volatile rest of the year. We might have price action in both sides of the market, which is a good thing.
All right. Well, and Steve, I think you bring up a really, really great technical point. You'll notice that the S&P, when we had that false breakdown from that move and that last leg lower, we are really stalling right at the 618 retracement. So great technical point you bring up there. Dale, I know you have your interviewee coming in, so I wanted to mention. First of all, I want to congratulate we've had actually several people just over the last few days because I see the emails coming in. I haven't been able to monitor people as closely as I normally do, but we've had a lot of people actually qualify for the trader funding program. They're now accessing our live trading accounts, which is awesome. So congratulations for those of you that passed. I know I'll just say Mr. David just passed last night, I believe, and which is awesome. And so if you want to learn more about the trader funding program, you want to learn how to access our money, all you have to do is take an assessment. You can learn about the rules right here. Just click on the link or the video. It's a 2-minute video. Learn about the trader funding program. Great way to not risk your own money. You just use our money. So anyway, team, I want to thank you all for being here, and I'll see you guys. Might be around tomorrow, but I'll be here more than likely midweek on. So thanks everybody for everything, and Dale, have a great interview.
Hey Blake, our team is a family, and your family here at ForexAnalytix, including everyone who is in the chat room and attendees, all are keeping good thoughts for a successful surgery for your wife, and that Godspeed for recovery.
Thank you.
Amen.
Thank you, guys.
Okay.
All right. Have a great day. Okay.
All right.
Bye-bye.
Okay. Thank you. So Stephen Clapham, how are you, buddy? Welcome back to F.A.C.E.
I'm very well. Thank you for having me back. It's great to be here.
It's always great to have you back. So I want to ask you, I know that you were agnostic in the gold market last time we talked. Has recent action changed your mind at all?
Not really. I mean, I was slightly laughing earlier because you had on a gentleman who sounded
laughing at who?
Who sounded English. Is there an English guy who was talking about sterling, and he said,
"Oh yeah,
the budget has been dragging on since Liz Truss's days." And it made me think, because last time I was on, your colleagues or the people in the audience were all very concerned about, the very short term. And I understand you're all traders, and so you've got to be concerned about the very short term. But, I'm much more concerned about the medium term and the long term, because I'm no good at trading, right? And the
most
gold,
aren't, Stephen.
The issue with gold, Dale, I think, is that gold is an insurance policy,
right?
And
like fire insurance. You hope you don't on your home. You don't want to have to collect.
Yeah, I don't own gold because I think it's going to go to $3,000 tomorrow, but I own gold because I think it could very well be $3,000 in 3 years' time. And if it is $3,000 in 3 years' time, the rest of my assets aren't going to be worth very much. So my thinking is that, you have a certain percentage of your portfolio in gold.
Is that a change? I mean, last time I brought it up, you didn't talk about that you had a long-term view on it. So have you been in this position for a long time?
Yeah,
just as an insurance policy.
I've always had a little bit of gold, and I've, since we've had some inflation, I've increased it a bit. Obviously, with what's happening to interest rates, you wouldn't expect gold to perform, but I've been quite puzzled that people haven't been flocking to gold more aggressively, because you would think that other, people would be worried about the economy, people would be worried about inflation, people would be worried about the amount of government debt, and gold is a logical thing to own in the face of all that.
Okay, just sounds like a different song than I heard last time. Last time, it sounded more like, who needs it? I'm not a gold person. But
No.
let's move to something that you talk about, things like medium term. So, we had a big dollar break. And I want to know what your view is when you look at the dollar. Here's a weekly. If you think this is a major shift or just a correction in the dollar, and that would tie in with, what you're thinking about cable and euro, et cetera.
Well, I think it's a correction. Personally,
okay.
When we had the dollar hit 103 overnight, I was frantically trying to sell the dollar, and it's now gone back up to 118, but sterling is incredibly weak, and I think people have overdone their bearish view on the dollar. But, you look at the dollar sterling, the dollar yen, the dollar euro. I mean, it makes it look like everything's fine with America, and I don't think that's right. I think America's been doing better than some other parts of the world.
Yeah, best dirty shirt in the neighborhood.
Best dirty shirt. And I mean, I was in the States in the summer, and it was $1.20 to the pound. So when I went into a restaurant, I looked at the menu and I could translate into pounds, because by the time you've added a 20% tip, it was dollars per pounds. And I mean, it was astonishingly expensive going to Hicksville, Arizona, relative to, I live in central London, which is one of the most expensive places on the planet. But guess what? Hicksville, Arizona, a steak costs more than in my local restaurant.
Is that a real town in Arizona, or that?
Yeah. You've not been?
No. And I lived in Phoenix for a while. No. I've never heard of Hicksville.
No, we didn't actually go to Hicksville, but we went round various, and America's such a beautiful country, and it's a fantastic place to visit. And I love America to visit. I love Americans, but the dollar I don't love quite as much, because not at this price. It doesn't make sense to me.
Okay, so you're bearish a dollar then. So
yeah, not short term. I mean, it's 118 against sterling. I could easily see it back at 106. But if we were to come back in 2 years' time, I'd be very surprised if the dollar was stronger than 120 against sterling. And it's what, it's nearly 250 against the yen, yeah? And I mean, that seems unrealistically strong to me. I mean, I'm not.
I'd love to see 109. That would just be a 61.8 correction. So I'd love a buying opportunity there. That's just my view. What about rates, Stephen? You know, the 10-year took a pretty good hit on, you know, it's just one report. You think people are going to end up being disappointed on rates that they haven't peaked and there's another high coming?
Well, I was quite surprised at the strength of the reaction to one inflation print.
Yeah.
Which wasn't you know, it wasn't like if you went back 2 years and you said in that, you know, we'll print that inflation number in November 2022, what do you think? People would have told you that you were mad. You know, they said, don't be stupid. Inflation could never reach that level. And, you know, inflation is far from gone out of the system, especially in the US, because your economy is still pretty strong. I mean, the UK is in recession. The US economy still remains strong, and I think the Fed will carry on. I don't see any reason why the Fed would stop raising rates. They might not raise by 75 bips every meeting, but they're going to carry on putting rates up. And I don't see why, you know, there was such a strong reaction in the 2-year on the back of one inflation print. I was and obviously a massive reaction in the equity market, which basically tells you that, you know, people want to buy the equity market, but you know, my view remains that we're in a long-term bear market, and that we've seen a bear market rally, and I think it's very important to understand that, because, you know, bear market rallies are really fantastic trading opportunities. Fantastic. You get very, very sharp, very, very quick improvements in the market. But at some point, you need to fade your positions. And that's, you know, that would be my strategy. Not, you know, not going into Christmas, because this is seasonally usually quite a good time in the year, may not be quite as strong this year, because I suspect that a lot of professional managers are going to do massive rotations of their positions, because if you're a professional money manager, you do not want to have Meta in your top 10 holdings come the end of the year. So I think those big losers will lose more, and I don't think the seasonal rally will be as strong as it traditionally is, especially as we've had a decent rally. And in the new year, I'd be looking to, you know, take profits again, because I don't think that 2023 is going to be a brilliant year.
View on energy, being in the UK, are you worried about it this year? Here's
you know, we've got, so the UK government has, I mean, don't ask me why they do this, Dale, because what they've done is they've capped,
supplement it.
Well, they've capped energy prices for everyone.
Yeah.
Now, you know, I'm very grateful, but guess what? I've got quite a big house. I can afford my energy bill, and I think I probably should pay for it. So on Thursday, I think what we'll see is quite a radical change by the Chancellor. Now, interestingly, I was at the Sunday Times Business Christmas drinks last week, and for the first time ever, the Chancellor of the Exchequer not only pitched up, but he made a speech. That is how keen they are to get back on side with business. That is how keen they are to be making a favorable impression. It was the Chancellor's birthday, and he took time out from going to dinner with his wife in order to go and say, you know, do a 5-minute speech. So they're in a pretty desperate situation. And what he said then was, he said, I don't have a pleasant message to give you guys and ladies and gentlemen. It's really horrible. taxes are going up. And what seems obvious thing to me would be, instead of capping energy prices, would be to give more help to the lower paid and the worse off, so that they can pay for their energy bills, but not give me any help. Because, why? The government is desperately short of money. They need to raise something like £50 billion. That's the fiscal gap. And so what they should do is they should make people pay the high energy prices and burn less fuel.
Yes. Okay. All right. No, not being it's like a continuation of the precedent set by COVID, that every time there's a problem, that the government comes in to support their citizenry with basically free money.
Yeah.
Right.
Well, that's exactly, you've hit the nail on the head. That's exactly what they're doing. And of course, it's a very attractive option for politicians.
Yes.
But at some point, you have to think about, how do you pay for all of this? And that is what Jeremy Hunt is now scratching his head over, because he doesn't have enough tax revenue. And, Liz Truss, idiotic idea that, you cut taxes and hope you grow your way out of it. I thought it was absolutely stupid. But it's not just the UK. I mean, you look at every government on the planet practically has got too much debt. And, America is certainly not immune. And you could even argue that Britain's in a better position to some extent, because we've at least got a 14-year term on our government debt. The US government debt is much shorter. So the rising rates are going to impact the US government much more quickly than it will in the UK. So, this is, this is not being discussed very much in the United States, but I think it's a huge problem.
Yeah, the interest expense increasing, you mean?
Yeah.
On the debt service.
Debt servicing is going to be a massive, massive issue. And, the problem we have is that corporations aren't paying any tax, right? So they haven't yet managed to really impose this 15% minimum rate. Corporations aren't paying enough tax. Rich people aren't paying enough tax, and they're using all sorts of dodges to hide from paying what is due. And the burden falls on the poor, and we've already got record inequality. Now, this is just not a sustainable situation. So something has to give, and printing money has got very very severe consequences. I mean,
well, here are these the consequences, where you have a collapse in treasuries and gilts, and really what's different about treasuries from gilts, and they called that a crisis. Do you believe that we're in the middle globally of a sovereign debt crisis?
Yes.
Okay. All right. Because I was just looking at TLT, and it had a decent week, put in a higher low. But what bothers me technically is markets rarely bottom when you have confirmed momentum confirms the price, and that happened at the low. Almost looks like we could make another new low in treasuries here. I'm open-minded to it.
Well,
so
I think that that's almost guaranteed, isn't it?
Well, nothing's guaranteed.
But the thing is, I mean, why? Okay.
Yeah, I mean, we could also come out of here too. So I mean, we could come out of here, put in a higher low. It's just one indicator, and it's a pretty big part of my work. Is I really believe, and I'm, at times it throws me off because markets rarely, but do sometimes peak when their momentum's being confirmed, and bottom with a confirmed low. So I've seen them both happen. The dollar's an example. So the dollar came off pretty good, even though it confirmed the high here. So, using this as a guideline would have kept you from being short the dollar. So this one, I broke my rules. I'm not willing to do it in the bond market. So do you think that, there's some money flowing into things like uranium, Stephen? Nuclear reactors, is that the solution? You look at some uranium plays and, you had a real nice move. This is a uranium trust. And you think about it, I think Germany's keeping their reactors running longer than they had planned to. Is this the way out, at least for a stopgap measure, nuclear, or is it long term?
I think some really smart people who were very early into this told me after they got in, which was and after the first phase of the rise, that uranium, the entire capitalization of the uranium sector was something like $28 billion. Something. I mean, it was just like farcically low. I mean, it's not something I'd looked at for a long time. But they've all been long uranium for some 18 months now. And, it seems like one of these situations which has got quite a lot of potential upside and not a huge amount of downside. I mean, we do have the COP meeting going on at the moment. And, they don't have a clue. The politicians don't have a clue what to do to get us out of this situation. We're getting freak weather already. I mean, uranium, nuclear energy is long lead time, but there is some various developments where they're looking at doing smaller modular reactors, which are much quicker to build and much more flexible. And that would be a big answer, not only to the climate change problem, but also to the dependence on Russian gas. And, those two imperatives are absolute. I mean, they must be right at the top of any European politician's agenda right now. I mean, it's less of an issue, I think, in the United States, but it's still an issue.
It is an issue.
And in Europe, it is a massive issue because, you look at somewhere like in the UK, we've only got one Green MP. But you look at Germany, the Greens have got quite a lot of power. And elsewhere in Europe, that power is only going to grow, and uranium is an obvious answer to that. So I am familiar with this stock, Uranium Royalty Corporation. Is that like the gold and silver royalties, silver, wheat, and Oh, that's interesting. I must take a look at it. I didn't know one of those existed. I didn't.
Yeah, UROY is the symbol. UROY.
Okay.
I got this from Shy Girl. That's how she was approaching the uranium market.
All right, she's very smart. I wrote a note on Saudi Aramco before it got floated, and she was very nice. She was promoting the note, but she's now got a huge following on Twitter, right?
Yeah. How about all the hand wringing and drama playing out in crypto and Bitcoin? Any view?
It sounds to me like, it's a toxic puke at the bottom, isn't it?
I think we could go a little bit lower, but I am beginning on the weekly. You're getting some divergence. So do you think these are good levels to start thinking about buying some Bitcoin now that everyone has? You think we're in a capitulation phase right now, right?
I think we're in a capitulation phase. I mean, I don't really understand Bitcoin and crypto, but people that are much cleverer than me, one commentator who I had in my podcast, Chris Wood, who writes the weekly Greed and Fear column for Jefferies. He was on my podcast about 6 months ago, and he's recommended that his institutions take a position in Bitcoin as well as gold. And he's researched it quite exhaustively. I was looking at 19,000 as being a potential entry point. The problem, I think, with crypto right now is how do you buy it? Where do you store it?
Well, you can cold storage. You keep it in a wallet. You don't keep it on an exchange.
Yeah, well, that's
okay. So it's like having physical instead of trusting it in your bank or another outside source to hold it. You hold it yourself. You lose it, it's your problem, but no one, it's not going to be theft in an unregulated environment where they could dip into your account to support their losing trades.
Yeah. So
okay.
That, I mean, I was quite surprised that at FTX, but I think that, you know, what's happened will make people like me who've been on the sidelines watching it and wondering, when do I get involved and how do I get involved? It adds another layer of complexity to my entry point, because I've got to now figure out where can I buy it and keep it safe. And but you know what, when you see all these pictures of Bankman-Fried at on every bloody press outlet, and all saying, oh, it's the end of the crypto world, that makes me think it's quite interesting.
Okay, well, you should have me on your podcast, because I think what's going to become a more important asset class is going to be food going forward, regardless of Ukraine being settled or not. Grain production is going to be down sharply again next year. We have a La Nina off the coast in the Pacific, which tends to be cold, dry on the West Coast, and I've seen it generate droughts in the Midwest. We already have one here out west. The heat in the summer that you had in Europe and India shaved another 10 tons off the grain supply, and the Fed can't print food.
I totally agree. I've done, you know, quite a lot of work on food in the past, because it was one of the sort of themes that I invested in when I was at the hedge funds.
Yeah.
And, you know, very simple analysis says that, you know, there's loads of people in Asia getting quite a lot richer. And when they get richer, they want to eat a lot more meat. And once you start to eat more meat, you consume a lot more grains, and they aren't making any more agricultural land. So that suggests that the value of the product is going to go up. And so I've got a very positive long-term view on this. I think the Ukraine situation is quite complicated, actually, and its impact on the prices. And obviously, you've had a very big spike immediately after the invasion.
Yeah,
and then
but grain prices were going up well before the invasion, for the reasons we discussed.
Yeah,
huh?
Yeah, and I think they'll go. I think they'll go back up again. I think they'll, you know, they will revert to going up again. And I think this is a temporary. But you can understand after it, you know, went up quite a lot quite quickly post the invasion. So there's some profit taking to be had. And now's the point, you know, it's going to turn soon, I guess, isn't it?
So the best idea that you have for people going into year end, Stephen, would be mainly to be in maybe T-bills and just avoid risk until next year, and own a little bit of physical gold, and maybe even be looking to buy Bitcoin at some point.
Yeah, and the other stock that I'm looking at is Facebook, Meta platform. That's another one where, you know, the people are puking it out. Yeah. And I suspect that they'll be puking it out at year end, because the last stock you want to have in your top 10 is Meta Platforms. It's been the worst performing big stock. And, you know, it just seems to me, Dale, that everybody's going, oh, Mark Zuckerberg's gone mad. And, you know, they're valuing his $10 billion a year wasted on his new toy of the metaverse. They're valuing it at the same multiple as they're valuing the ad business.
Yeah.
And, you know, I'm not a big believer in Facebook. I don't think it's a growth company or anything, but I think it's got a lot of cash flow coming out of it. And I don't think Mark Zuckerberg is a stupid guy. And he might spend $10 billion a year for a couple of years or 3 years and then give up. Or he thinks that, you know, he'll do something with it. But it's not, it's a, you know, it's a finite spend. And Zuckerberg, he doesn't need the money, obviously, but he will be concerned about his share price, because every single option that he's granted to his employees is underwater. So how's he going to motivate people? How's he going to keep people? He needs the share price to go up. So, you know, at some point,
He
will
shouldn't have
stop.
dumped as much as he did last year then.
Well,
He
you know,
dumped a vast majority of his shares into the highs.
but I don't think he dumped the vast majority, did he? I mean,
Yeah,
I don't
quite
know.
a bit. He was
Okay,
a big seller of Facebook before
but-
the name change. Yeah.
But he, well, he is quite smart then, right? So, but
He might have had a little inside information on that one.
oh yeah, he may have had a clue, but
Yeah.
The fact is that this is not about the money for Mark Zuckerberg, right? He's given away most of the shares to his foundation, right? And so he's probably selling those shares to reinvest in some, you know, in a broader, more diversified portfolio, and he sold it at the top. Fine, good luck to him. But he is built one of the biggest businesses on the planet. He will not want it to fail. So what's he going to do? He's going to try and make it succeed. So my view is that he will not carry on wasting money forever, and that the cash flows will win out. So, you know.
All right. So the best place for people to follow you, Steve, at on Twitter.
You can find me on Twitter at Steve Clapham. I'm
Here's your website.
Go on my website, behindthebalancesheet.com. If you hit that sign up button, you can get my free weekly newsletter. Free is my favorite price. And you know, I send that out every Sunday morning my time. And it's been very, very popular. And
there you
can
go.
Get all sorts of things on the website, loads of free resources. If you go on the website and you hit investing resources, I've got YouTube videos helping you how to invest, helping you to analyze financial statements. I've got the top 20 newsletters, the top 20 investing podcasts. I've got loads of great stuff there, Dale.
Okay.
Help people and create.
Thanks for providing these resources for people, Stephen, and thanks for your time today. And if I don't talk to you, I hope you have a great holiday season and Happy New Year, and we'll get together and see how things have panned out sometime early next year.
Well, I shall look forward to that, Dale. Thank you again.
Unless you have me on your podcast sooner. I'll see you in February, probably.
Cool.
So
I look forward to it.
All right, buddy. Steve Clapham, everybody.
Thank you.
You could follow him here, behindthebalancesheet.com, his website. Some excellent resources from Stephen. So that's a wrap, everyone. You could join the team in 15 minutes, 13 minutes on the Morning Edge. And I'll see everyone tomorrow for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Adios. You're welcome, Alexander. Bhavana, you're very welcome. See you guys.